It's nice to be here in PE. I'm actually all the way from Durban, so we've come from really warm weather. I had to pull out all of my nice clothes that I don't ever get to use in Durban because we don't get this type of weather. So very nice being here. So quite an interesting topic. I was quite interested with the last speaker speaking about public funding. And I think this gentleman over here actually stole a little bit of my thunder earlier this morning because he mentioned about compliance and how important it is for a nonprofit. So obviously my session is looking at compliance, but obviously looking at it, how does it impact you as a nonprofit organization? Yeah, just going to click through this. Okay. So obviously, if we are looking at funding, whether you are getting funding from a corporate, whether you are applying for public funding, at the end of the day, you are accountable for those funds that you've received. It's not your money, which means you're accountable to the donor, you're accountable to whoever has invested in your organization for you to achieve your vision, your values. But what we found with working with nonprofits is that very often the project and program side of things grows brilliantly because you're passionate about what you want to do. You've put in your systems and your processes in place to achieve your objectives in terms of projects. But what happens on the admin and the finance part of things? That's where things sort of, the wheels fall apart. Often it's because of a lack of understanding, lack of knowledge of what is it that you as a nonprofit have to actually achieve and comply with for your organization to continue operating, to continue to get donor support. Because remember, if your organization is transparent in how you are spending those funds, if you're meeting all of the compliance requirements for your donors and compliance requirements from a legislation perspective locally, you can then increase your donor support because it adds to your credibility, which means it's more funding to your organization. And at the end of the day, obviously, as a nonprofit, you are reliant on funding. You know, most nonprofits are not self-sustainable. All of the money that comes in is coming in from a funder, whether it's government funding, whether it's international funding, or whether it's just the local community that's supporting your organization. You still, you're reliant on that. Again, I'm just going to stand here. So before I even go into the compliance, I think what's important is to understand that we have 3 types of legal structures in South Africa that your nonprofit organization can fit into. And often when we present, we find that the people in the room don't always know where they fit in. You know, when you speak to people, they say, oh, I'm an NPO, but the term is so loosely used that it means different things. So to me, it means you have a DSD registration because you have an NPO certificate. But when we start talking about, are you tax exempt, or are you a trust, or are you a voluntary association, people don't understand the differences between the two. So it all starts here. You know, what is your legal structure? Because your legal structure will determine what sort of compliance you have to follow. Besides SARS and besides DSD, well, leave SARS aside, because SARS is a whole separate issue. But your legal structure then tells you which sort of legislation you need to comply with. So if you're registered with Sub-C, so you're an NPC, so you have an NPC number, so you're a not-for-profit company, you are legislated by the Companies Act. Now, a lot of organizations that we come across, they will give us a constitution, but they're actually an NPC, and they didn't realize that they're an NPC, right? So your legislation is very important because then you have the Companies Act, you've got to comply with that. Your founding document then is your Memorandum of Incorporation. It's your rules and regulations that you've got to comply with. Then we move on to a trust. So with trusts, you are now falling under the Trust Property Act, which is a separate legal structure. It also then you have your trust deed, which becomes sort of your Bible. Your trust deed, again, like your MOI, your trust deed will tell you what you're allowed to do, what you're not allowed to do. And then you have the least administrative of them all, the voluntary association, which is where most of our smaller nonprofits fit into, because you literally just people coming together, you drop a constitution, and you're up and running, right? So that one is least administrative. You only have common law principles that you have to comply with. So this is first step of compliance, is ensuring where are we? Where do we fit in? And then once we know that, then we now start looking at the specifics. So I want to touch on grey listing. I'm not going to go too much into it, but this is something new. Well, it's about 3 years now. I think 2023 was when it was enacted. And a lot of people didn't understand what it meant. How does it affect a nonprofit? When I had to research this, I was like, how does it even affect our clients? And then I realized, oh my word, it has a huge impact, because the whole thing behind this was about money laundering and funding of terrorist organizations. And if you're now an NPO that is sending funds overseas, you are in that. You may not be actually doing it. You're not funding a terrorist organization, or you're not involved actively in money laundering, but maybe somebody's using your organization for that, right? So obviously from a compliance perspective, it's just understanding that there is this whole thing that came about. I read an article the other day where they're now re-looking at whether we're going to continue to be grey listed as a country, purely because obviously there's been leaps and bounds now since we originally got placed. But what does it mean to you? So it's just an added level of compliance. So previously, if you were an NPC, or even if you're a trust, nobody really knew who was management or who's on the board. I mean, yes, it would be in your financial statements, but you never really disclosed that to anybody, Now with grey listing, there's this whole thing about they want to know ultimately who is behind the organization. Obviously, as a nonprofit, we don't have shares, right? So there's nobody that owns it. You don't have a shareholder, but you do have management. You've got a board. So you now have this added level of disclosure that you've got to make. So if we're talking about like a trust, we've been doing trusts for years, and we've never had to submit anything to the master's office unless you wanted to amend your trust deed. Now you've got an annual submission requirement. You've got to submit to the master personal information on your trustees. So anybody that is named in your trust deed or your letter of authority, or even if you have beneficiaries that are named in your trust deed. Obviously for nonprofits, you won't have a named beneficiary because you're serving the public. But you now have to upload annually to the master's office this template that they have where you've got to fill out personal details, cell numbers, email addresses, residential address, and ID numbers of your trustees, right? I can tell you, a lot of nonprofits don't know this, they don't do it. If you're a company, this one's an easier one because you're forced to do this. When you submit your annual return to CIPC to keep your company active, you have to do a beneficial ownership disclosure. But for nonprofits, it's not really, it's just a form filling exercise. You choose a specific form and you're on your way. But if you're an NPC and you don't know whether your company is compliant or not, go and check. You might actually be deregistered. Then we have a voluntary association, no effect on you because obviously you're not governed by any legislation. And now I'm going to look to the DST person in the room. So obviously DST, so where grey listing happened, there were amendments to the legislations. But the one big one was DST, where it now said that if you were, previously DST registration was not compulsory, right? It was, you could decide if you wanted to. I hope I'm saying the correct thing. But yes, but it was voluntary. But then with grey listing, they added in a clause that if you were doing welfare and humanitarian work, sorry, it's on my next slide. If you're doing welfare and humanitarian work outside of South Africa, it's now mandatory registration for you, which a lot of people don't know. So you could be non-compliant, and this was effective in April 2023. We're now in June 2025. I hope I didn't shock anybody here. I always get that when I present. There's people that come up to you afterwards and they're like, you've now scared me because we did not know these things. So if you are doing work, obviously a lot of the organizations here might just be doing work in the community, but if you do know people, other organizations that have a bigger footprint, they may not be aware of this. So this is important information. Okay, so that was just grey listing. Then we go on to statutory and legal compliance. So I don't know who here does finance or admin at a nonprofit. By show of hands, anybody here in the room is involved at that level? Okay, so there are some. There's a lot to know. There's a lot to be aware of if you are in admin or finance in your organization, or if you're wearing multiple hats, which a lot of nonprofits, you're wearing the hat of the fundraiser, you're wearing the hat of the operations person, you're wearing the hat of the finance person. So or if you are sitting at a top level, you need to be aware of what your organization is supposed to be compliant with, right? So if we look at just monthly compliance, if you have employees, which most nonprofits have because you are people intensive, you are relying on people to help you get your vision and your values out there, you need to be registered with SARS as an employer, which means you need to be doing a monthly submission to SARS called an EMP 201. You have to pay it by a specific date, by the 7th, to avoid interest and penalties, and there's a penalty of 10% if you don't comply. Then you've got Department of Labor. So you have employees. There's obviously specific requirements in terms of the amount of hours they work for you and things, and whether they're South African or not. But you have to register, right? Now, a lot of people don't think they need to. UIF also has its own portal, which you have to submit on a monthly basis. Then you've got VAT. So I'm not going to touch too much in terms of the nitty-gritties behind VAT, but for a non-profit, this is obviously a source of income for you. But if you are registered for VAT, you've got submission requirements. It has to be in by the 25th. Any delayed submission, again, will be a delay in refunds for you. Jonas spoke about it earlier, how SARS can actually be a donor to your organization if you are registered, because generally you are getting a refund from them. So if you are VAT registered, even though you may not get a penalty for late submission, but there's a cash flow impact to your organization if you are behind. Then if we look at annual compliance, so the first one I have is SARS. So very often when we ask people, have you done your tax return? And the first comment I get is, but we tax exempt, we don't need to do one. Yes, you tax exempt. That just means you exempt from income tax. It doesn't mean you exempt from the administrative burden of submitting a tax return. So there's a specific tax return if you are PBO in South Africa. So you've got to still submit that within 12 months of your year end. Then we've got your EMP 501. It's a biannual and an annual employer tax declaration. So our IRP5s that we all get as employees, this has to be submitted to SARS 31st of May and 31st of October annually. Then we've got DST. So if you are registered with DST, you have to submit your narrative report within 9 months of your financial year. Now I'm gonna actually speak to you later because we have a lot of problems with the website and submitting. It's offline, yeah, it's almost always offline. But if you were listening to the news and looking at DST alerts towards the latter part of last year, they went on a big deregistration campaign where organizations that were non-compliant for many, many years were being deregistered. And very often, people forget about this one because you don't get a reminder. Like SARS, SARS will phone you. So you don't get a reminder to say you have not done your DST. I mean, people were panicking when that alert went out. And we had clients where we were doing 10 years, 12 years of submissions, and they were still active. But obviously, to remain active, you need to make sure you're compliant with this. Now, often, the other problem you have with DST is whoever registered you or whoever's details is on that portal, that's another problem. Okay, it's not working at the moment, but trying to get the details or the password is a mission. So check your DST compliance. You can actually contact them just to see whether or not. There's also, you can check on their website whether or not you're still active. I think that's an important one. Is when we do audits, that's one of the first things I do, because clients will say, yes, we submitted, but there's no proof sometimes. First thing we do is we go on, check, are they still registered? So it's a nice thing to do. Okay, and then just 2 more things, and I'm done. One is workman's compensation, if you have employees. And the new one, for those of you that are 18A registered, is your IT3D submissions to SARS. Okay, I'm not going to go through this. Jonas is just telling me about time. But basically, I think at the end of the day, for you to be compliant, you need to have processes in place to ensure your compliance. So it comes down to what is your accounting systems like, what is your awareness of all of the compliance requirements. And if you are aware of that and if you have the processes in place, you can then ensure your compliance from both a legal perspective, both from a statutory and a SARS perspective, and then ultimately compliance with your donor. Because at the end of the day, you still need to be compliant from a donor perspective, so donor reports, and providing them with timely information and making sure your organization is effective, it's transparent in its reporting, and fully compliant. I think that's it from me.